Good afternoon, everybody. It is Brian Shannon from AlphaTrends.net. Today is Friday, the 9th of July, 2010. And just a quick reminder, we have this workshop coming up with SMB Capital and myself, July 31st in New York City. So if you're in the area, come on by and sign up on the. I'll post a link after this show. I'll tweet it out. That is. Anyways, let's take a look at this market here. We had a strong week for the market. It was up 4 days in a row. A lot of people made a big issue of that. Monday was, or Tuesday rather, was a little bit of a false start, I guess you could say. And then, we had that nice follow through on Wednesday as we got above that 5-day moving average and definitively stayed above it. So we've got this market the last 3 days really is what I consider this uptrend. Is that's where we made the higher high above that 5-day moving average, and the 5-day moving average began to rally. Looking back on it. I wish I was still holding BGU that I had bought back in there, but of course, I'm not. So, anyways, it was a nice week for the bulls, and it just goes to show again that this is a great trading market. If you're a longer-term investor, yeah, you should stay away. But we've had some great trending moves here, long and short, the last couple months, really. And this most recent leg lower, of course, we've seen that this is where we got that higher high this week above the 5-day moving average. Last week, the theme was we're stuck below a declining 5-day moving average with lower highs and lower lows, and the market was guilty till proven innocent until we got above that 5-day moving average. And this week, of course, on Wednesday, I had said that it looks like we have higher prices still coming. What I was looking for actually on Thursday was, what I call the ideal scenario would have been a pullback down towards this little resistance that was that had formed near about 105 in a successful test. But of course, we gapped higher, did get a pullback and some strength late day yesterday, and we had strength late day again today. So right now, we look at it. This market has accomplished a few things on the upside. That is, number one, it has rallied beyond the 38.2% and beyond the 50% retracement right here, and it's also closed the gap from June 29th. That gap, the closing number on the 28th was 107.53. We had gotten above that, and now it looks like this market is headed for the 61.8% retracement of this decline. The market could continue higher beyond that. Right now in the daily time frame, you can see we're just above that 20-day moving average. So moving averages a lot of times do become resistance, just like Fibonacci will at times, but it doesn't mean that's where you want to sell. It means here's an area where we would expect that maybe this market will encounter some resistance, just like the Fibonacci. But you can also look at this market and say, from the weekly time frame, as we know, we had bounced from that 38.2% retracement almost precisely, and that level was further added as significance because it was the volume weighted average price since the low of March 2009. So basically, as I said, kind of this morning, actually on Alpha Trends, what I had shown was the volume weighted average price since the June 21st high, and said that basically we were holding above that. This is that volume weighted average price, and that could be loosely interpreted as the average participant since June 21st who's been long is now making money, whereas the average short participant below that line, the volume weighted average price, on average, now it doesn't mean all of them because the people who sold short up here wouldn't be losing money, but on average, the average short position is losing. Just the same on this weekly time frame, we could interpret it as the average price since the March lows from last year is right around in this 101 area. So that takes on further significance as far as a potential level of support for this, or a widely an area to watch and place emphasis on. Now, the weekly time frame is still it's still broken here, and what we're looking at right now on the weekly time frame is a rally within a downtrend that is guilty till proven innocent, but as we're below this 200-day moving average and all that. So where this market goes, in order for it to become bullish again, we're going to need to see it clear that 113, 114 area, and obviously that's too far away to realistically consider right now. And the path of least resistance is lower because we've got that declining 50-day moving average, and we have, of course, lower highs and lower lows. So we're going to need to see it get back above this level before we could really consider that the market may turn around, and that's just too far away to call a turnaround and call it realistic. So the emphasis really, in my mind, needs to stay on these shorter term trends within the bigger trends. And this is, again, if you learn nothing else from me, where is the market in relation to that 5-day moving average for intermediate term trends? It was money for keeping us from getting long and staying in some short ideas last week, and this week it's really been a good guide for saying that the buyers are in control in the intermediate term time frame. But we have to be mindful that the daily time frame is still in this downtrend, so we want to say, well, where do the potential levels of resistance come in? And that's where we look at potentially a 20-day moving average. We also look at those Fibonacci levels because they do tend to bring about a self-fulfilling prophecy in terms of they're widely watched, and therefore people take action near them. And as I've been pointing out, some of these moves have been just so precise on the Fibonacci from this high to that low, exactly 50% retracement on that weekly time frame, almost precisely 38.2% retracement. So now the likely or the logical area to look for potential resistance, and it may not get that high, but that 108.65-ish area is where we would expect that maybe this market will encounter some resistance. So that'll be an important level next week. When we look at a 10-minute time frame, the significant levels that should offer support, and what that means is if we break these higher lows, then we would expect maybe a drop down to the next significant level. So 107 is going to be important early next week. That's where we had seen support pretty much all day today as the market coiled in this tight range. It kind of had a little false breakout there, but then did get going once it was above that daily R1. But so 107, if 107's to break, then perhaps we head down towards that 105.90 area. We have a rising 5-day moving average that will come into play. That may offer support, and it'll be coming at this angle. So maybe the market meets support on a pullback at the 106-ish area, which will be approximately where that 5-day moving average is as well. But for now, you don't want to be fading this move. You don't want to be looking at it and getting short. I think you want to wait for more of a distributional pattern like we had seen up in here, where the market broke below that 5-day moving average, and then the 5-day moving average was declining, and that's when the market was guilty till proven innocent. Now we're in this mode of innocent till proven guilty from an intermediate term standpoint. On the daily time frame, you still have to look at this market and say, look, we've got this rally occurring on diminishing volume. The last rally came on diminishing volume as well as this rally in here, and that, it's I always say only price pays, and it's true that only price pays, but when you see the volume diminishing like that, it does throw up that cautionary flag and say, well, be extra cautious, because the buyer's conviction just doesn't really seem to be there. Maybe it's more of just an absence of supply, which is why this market is rallying the way it is. But until we encounter a source of supply that slows this market down, in other words, some resistance, and we see that battle being fought where the buyers and sellers are fighting back and forth, and then as the sellers regain the momentum below a declining 5-day moving average, then you just want to be, is the shorter term moving averages crisscross, you get more neutral. In here, you look at them and say, where are the more important, significant levels of potential support? And if they're broken, what's the next one below that? Until then, you focus on the good stocks that are rising. There's a lot of great moves this week. Some of the stocks I was mentioning for subscribers to keep an eye on last night had great moves today. Ariba up 5%, ERES, a really thinly traded stock, and I probably shouldn't be mentioning it here on StockTwits, but it's got a great looking daily chart, the weekly chart as well. The problem with this stock is that it only trades 284,000 shares, so it's not the right stock for everyone, but still had a good day. OmniVision, which is in a nice uptrend and has some good fundamentals, broke above some little resistance there. Rubicon, same thing, broke above this little level of resistance we were watching. So a lot of good moves in there, and still some that are set up nicely. You look at a stock like VCI, Velasys Communication, really just a picture perfect inverted head and shoulders pattern. It hasn't broken that neckline, kind of created that extra little bump, but Velasys is in this much longer term massive uptrend, and now maybe getting above this level with a stop below here, so getting above that neckline near about 32.20 with a stop below 31.45ish. Maybe Velasys can rally back up to that conjunction of the 20 and 50-day moving average. Those are the types of stocks you want to focus on. The stocks that have been big winners and have been beaten down, and they start to set up on the shorter term time frames. You don't want to chase the ones that have already moved. Somebody asked me to take a look at PWER. And let me just scroll down and see who that was. Bionic Trades asked me to look at PWER. PWER had a great move this week, and if you pay attention to the stream on StockTwits, you'll know that a lot of people got this stock right. A lot of people were involved in this stock on Tuesday and on Wednesday, and personally, I don't think you chase it after a 4-day rally where the stock has gone from basically about $6, well, just call it $7 a share, to $8.84. So it's gone $1.70 on a $7 stock. That's close to 16% or so. So I don't think you want to be buying a stock like PWER after a move like that. If you're involved in it now, though, this looks like an important area for as far as short-term support. Maybe a little bit of room just below it to 830, but the name of the game in here is not to chase this stock. If you do chase the stock, then maybe you set your stop tight and you can get away with that and still see some momentum. But you want to get involved when people like Howard were buying it and adding to their long-standing short position on Tuesday and Wednesday, and I think Lee Drogan was involved in this. I saw the Chart Diva on this. A lot of people were involved in this stock, and it's in a great uptrend, and the weekly chart looks good as well, but I just can't see chasing it after that move. Now in the weekly time frame, it's consolidated very nicely here, and it looks like it still has some room to run, but again, is this the ideal entry point? Probably not. However, if you were going to keep your stop real tight, then maybe you can participate in some continued upward momentum. But it looks good. Let's see. How about a look at DBJ Ret wants to take a look at Squintum because it was up 10% today, and I would say you don't want to chase Squintum either. Especially, look at this stock. It's in a range basically. It's range bound. It had a good day today, and this good day will probably end up being like this good day, this good day, and this good day. That turns into a one-day event. It's a range-bound stock. It's a biotech. It really needs to clear this bigger range near about 680 for a move to really unfold. If you're in it, it's getting extended on an intraday basis, but here are the important higher lows. Now it's gotten extended. I think it probably needs to pull back, establish another higher low before it could continue to move higher. So again, I wouldn't chase it, especially due to the fact that it's had a 10% rally today, and it's in this bigger range on the daily time frame. Let's take a look at the financials. The financials have had a much stronger move than the broader market, and if you look at the strength in here, you see that based on the June 21st high to the July 1st low, this market has gone up and beyond that 61.8% retracement. It's also closed this gap, and you look at the daily time frame, it's still an ugly mess. But you look at this, and this is what I was talking about last week, if you recall. I was talking about this important level of support that a lot of people were looking at, and rightfully so, that it is an important level. And but I was saying that what happens a lot of times is that a lot of people look at these support levels, it gets broken, and then you have a violent move in the other direction. And that's exactly what we had here. So from this failed breakdown through that 1360 level, the people who sold short thinking, hey, it's breaking this big support at 1360, they got involved when? They got involved after the market had already dropped. To sell short after the market has already dropped 10% in the prior 2 weeks is just foolish. It's no different in my mind than chasing a stock that's up 10% in one day. Doesn't mean you can't make money shorting down here, but you have to be super tight with your stops, because when you have these bigger moves that are, from these failed moves come these fast moves, and that's what we had in here. That's no different than trying to buy this breakout past $72 a share, or I'm not 672. I don't know why I thought that, but this $67 a share level in the Russell 2000. And back there, I said we have to be aware that this could be from a failed breakout comes a fast move lower. So looking at the financials, where are we? We're still a mess in these financials. Perhaps they rally up to that 50-day moving average. Perhaps they go a little bit through it. But the fact is, short term, the buyers are in control. We've got these higher highs and higher lows, so you don't want to be shorting yet. If you're long, you want to be selling part of your long positions and be looking to lock in some of these gains. And if you're looking to get short, I think that it's better to be on the sidelines stalking this trade than it is to be early. So cash is a better position than being short the financials right now. This rally attempt is likely to, from what I would look at, it looks like it will probably end up being a lower high, and we've got this prior little area of resistance that's going to coincide early next week with this declining 50-day moving average. So maybe it continues up to there, and then it starts to decline. But right now, it's just not. This week was an incredibly bullish week for the financials, and for the people who were shorting based on the fundamentals. You can't time your shorts on fundamentals. You can time your shorts with technical analysis, and if you have a bearish bias towards something, if you can marry the two of them, then you can get the fundamental picture right, which gives you the confidence to hold a position, and then get the timing right, also gives you that confidence that you're not getting stopped out, or you're not taking these huge unrealized losses before the market finally, the market, quote, finally gets it right. The market gets it right. The timing is what it's all about, though. Let's take a look here. Finance Trends, thanks for that retweet. Leslie, thank you as well. And can I take a look at Cake for Ravensboro? How about a look at CAKE? The Cheesecake Factory, nice move the last couple days. Let's take a look at the daily time frame. The daily time frame is still in a downtrend. It's still got a pattern of lower highs and lower lows. So this looks no different than any of these other bounces, and probably likely to encounter some resistance up near this declining 50-day moving average. So we've got a downtrend. To me, it's guilty till proven innocent. We would need at least some sideways activity, pull back, and then start to form a base, a stage one accumulation, then break out. But if you're long this stock, I would say protect those profits, because it's likely to fail. It's not showing any signs of slowing down right now. We have, I would say, protect yourself with a stop. Worst case down just near about 2405-ish area. But this daily time frame says it's a rally within a downtrend that's likely to fail. It's come down to the 200-day moving average in this prior important level as well. So maybe we start to see some more base building in here, but I don't think you want to be a buyer of this stock, because it's likely to be running out of upward momentum, and I think the frosting's about to come off of this one. Let's see. Thank you, Jack, and U.S. Market Trading for those retweets as well. Let's see what else we have here. How about a look at OmniVision for cheese and wine? I had mentioned that I was talking about OmniVision for subscribers last night, and we were talking about getting involved today above this level after this little consolidation, because that's where it had gotten above what was at the time that 2-day volume weighted average price. But OmniVision is now doing battle with this area where it had gapped lower too. You could look at that and say on a 10-minute time frame, is that a cup and handle? But the daily time frame still looking really bullish. We got down, we had a little shakeout, and that which didn't kill this market made it stronger. And the weekly time frame still looks like it has room to run. I would say probably at least to 25, or these highs back from 2007. And if it can get up through those highs, then you're probably looking at a $30 stock here over time. I know that they supply the cameras, or at least the components for the iPhone, and so it's apparently got a bullish story to it as well. So I think that when you look at these pullbacks and these little consolidations, and these are the places to get long for short-term trades, and then you protect yourself with stops underneath these higher lows. So if I was in this as an intermediate term trade, I'd say a stop goes probably about 22.85. For a longer term investor, I'd think that this level, which was the prior resistance, which had found support, is now an important area for people who are looking to hold things longer than just a few days. So maybe a stop near about $20.30 or so. But OmniVision continues to be a strong stock. Let's see. Buy right is saying, I've been short MLHR, which I believe is Miller Herman, since 21. Where would you put a stop? Thanks. So since 21, so it looks like you have a nice entry that you got short either over here, probably right over there as it was breaking down. So that was a nice short. I don't think that buy right that I would be of good service telling you where I would put a stop in this one, because I certainly wouldn't have held it since 21. I probably would have been stopped out. If I was looking at it from a swing trade perspective, I might have said you wanted to get stopped out around in this area. Right now, I would say you would want to be out of this because it's above the 5-day moving average, and that's really, to me, you want to be short these periods where it's below a declining 5-day moving average. Now it's back up above it, so I don't want to. It seems as though, in other words, you have a longer term perspective than I might look at this stock. So I'm not sure my stop would be of value to you, and in fact, I wouldn't be short this stock because it's above that 5-day moving average right now. So I think my analysis might not help you too much in that. Gareth Green, thank you as well for that shout out there. How about a look at Altera for Dan Conway? Dan, let's take a look at Altera. And my friend Steve from Today Trader was pointing this out to me, that Altera, Click, and a lot of these semiconductor equipment manufacturers, what were the other ones? We're getting going here late in the day. Altera, Lattice Semiconductor as well. I thought it was interesting that AMAT hadn't been doing anything because they're the biggest of the semiconductor equipment manufacturers. But Altera looks, it looks way better than the semiconductors. The semiconductors really, again, here's another group that still has lower highs and lower lows until proven otherwise. But Altera, obviously a leader within the semiconductor group, and again, they're a manufacturer. You look at this longer term chart, and that's just a beautiful, what is it, 9-year highs here, 8-year highs. So it based on the longer term look, it looks like it's headed up towards 31, 32 bucks a share. Looking at the daily time frame, it's gotten a little extended here the last 3 days. Doesn't mean it can't keep going, obviously, but this is where, again, on Wednesday was the day that most of these stocks got above those 5-day moving averages and created that higher high above the 5-day moving average. Right here was the ideal buy point. We'd seen these higher lows and that 5-day moving average flattening out. That was the ideal buy point. Now it's rallied. We've got this higher low and this higher low. So to me, if I was involved in it from that ideal point, I would say your stop would probably want to go here. three up days in a row that have gone pretty good percentage wise. 10%, 25 to 27.50. It's rallied $2.50. So 10% in the last 3 days. If for new purchases, I would say a stop probably goes below here, maybe a little pullback, and then it gets going. But that I like the longer term look of it. That if you're an investor and Dan, you're already in this one, then I would say if you got it at a favorable price, stop maybe even down near here if you're managing this for your clients and that sort of thing. But as that's the prior resistance right in here and just above this little pullback low as well. So Altera can't Dan, you always have good ones. You've got a good eye for these, especially you find some of those good ones that have those much longer term bases as well. Eric wants me to take a look at Apollo. I know it's not your type of setup, but I'm looking for a counter trend reversal. Yeah, it just looks horrible on this daily time frame. I'd say you're asking the wrong guy. Good luck with that. Although, shorter term time frame, we've got some resistance up near 45, so maybe we get another push up towards that 45, pull back, create a higher low, and then it breaks through it. Protect yourself with a stop. These are dangerous. Trying to pick the bottom in these types of stocks, just very very difficult thing to do. Anyways, it's not my type, so and I'm not the right type of guy to ask for about that. Anyways, that's going to do it for today. Sorry we didn't get to all of them. If you subscribe to Alpha Trends, Monday nights we do a live webinar, and every single time I answer every single question. So join that up, and there's a 2-week free trial you can take. Everybody, hope you have a great weekend and had a profitable week. I'll talk to you again next Wednesday.